Okay, so just tell me when you started trading, how much you started with, how much you added, that stuff, just the basics.
So I started back in, I think I started after I took the SML course. I started in Feb beginning, and I started with about $4,000 in my scalping account.
Okay.
And then I traded for a bit. I think I traded for a month or so, and then once I had a little more confidence, I think I added 10K.
And why'd you pick scalping out of all styles? Like,
I think for one, it was definitely because both my mentors, Usman and Omar Ashraf, they're both pretty much scalpers, right? So I think I could get the best advice from their trading experience. But beyond that, I found that it sort of aligned with my personality in the sense that I'm sort of like impatient, and I like to be in control of the trades, especially in a market like the one we're in right now, and like the market that we've had the last week, where things can pull back almost instantly, and the market can reverse, and you can never really know what's going to happen. So I think scalping in that sense, with the right risk management, is almost always successful in a sense, because you're the most in control of the trade, and you can cut or take profit whenever you feel is the right time.
okay. And in terms of scalping, why'd you choose? So you scalp breakouts mainly. So why'd you choose breakouts? Like, I know most people scalp breakouts, but is there any reason why you specifically chose breakouts versus, I don't know, dip buying, buying on pullbacks with other strategies that there are related to scalping?
I found that the most volume and the most momentum kicks in around those key levels. So like if you see a pre-market high or a pre-market low, and as well as like critical levels and stuff like that, once you usually, what you tend to see is and even more than dip buying and stuff like that, you find that the momentum kicks up a lot more around those critical levels and around the pre-market highs and pre-market lows. So I like catching those breakouts rather than dip buying and buying from levels of support for the upside, or levels of resistance for the downside.
Okay. So before we get to actual trades, so what's one thing that you think that most people don't know about scalping that isn't taken into account a lot and you think is really important overall that people don't know and people ignore?
Scalping, I think a lot of people try to do it without being able to read the tape efficiently, and I think that's one thing that's extremely important. You have to really understand. You need to be able to read the tape well, and more than that is you need to have a set number of stocks that you're comfortable with more than anything, because every stock moves differently. Every stock has a personality. And if you're able to understand how that stock moves around a critical level, you'll even be able to hold through a little bit of a pullback when you're scalping as well, because you know that this is what it does around the key level.
Okay. And what do you think is the biggest myth or like thing that people think about scalping that's not true as a whole?
It's not easy. I think most people just think that scalping is like quick money, quick easy money, and
that's literally like when I started trading, that's what I heard. Scalping is quick money. So I'm like, this sounds cool, but I'm like, no, it's not. It's quick and easy money at the beginning.
There's no easy money. It takes a lot of time to review the trades, review the tape, and see where you're going wrong, see how you can understand it.
Oh yeah, that's 100%.
Okay. And well, one other thing. So, what does your schedule look like in terms of before the trading day? When you like the time you get up before not for you get up, but the time I guess that you start around what you do during the trading day. One of my biggest questions for you, and I think that a lot of people have, is most traders, even Umar and stuff, trade the first hour, first 2 hours, and normally take a break, maybe come back at the end. But how do you focus almost throughout the day? Because I know there's multiple days where you sit throughout the day. So.
Right. So I think it mostly depends on, you got to pick what days you want to sit through the entire market. For me, at least until now, for the past 2-3 months, we've had a lot of action midday, be it midday or in the beginning of the day. You'll see stocks make huge midday moves as well. So for the past 3 months, I've been sitting throughout the entire day. And I think for me, because I live in Dubai, and it doesn't really matter whether the time difference is different for you. But I know that for me at least, when I usually hit the gym, right? So I hit the gym before I sit on the desk to trade the market hours, and that sort of gives me energy to like, you know, sit through the entire day. I know that people usually say that if you work out and then, you know, you have to do work, you kind of lack energy, but I find it sort of on the contrary, wherein after I work out, I'm sort of more energized in a sense. It gives me a little more focus to sit through the entire day. But yeah, you've got to pick your days when you want to sit through the entire day, because especially in the current market, like the past 1 week, we've had some midday moves, but it's almost always fake outs. So for a scalper, if you're trying to scalp breakouts, it's not the best idea to sit through the day. If you make money in the morning, if you make money in the first hour or two, you want to take your profits and run, and maybe you can come back for power hour.
Perfect. And one other thing, so this is a question that I had for you that I think other people will be interested in. So like if you see like some traders will post like while they're trading, they'll have like Netflix running, TV running, something else. Do you ever do that? Or when you're watching, are you fully focused, or do you set alerts? You're kind of just there in case they go off, or you're actively always focused on it?
Okay, no, I cannot sit through the entire day by just looking at charts. It's mentally draining, it's mentally exhausting. So I'm going to give it my full focus in the first hour or two. That's what I do. And then once I see the market volume drying out, I'll set my alerts. I still have my charts open, but I have 4 screens. So I have my charts open, and then one of the screens I'm watching Netflix or I'm doing some other work. But I cannot be looking at charts the entire day. It's mentally draining. You need to give your brain a little bit of a break.
That's 100%.
Yeah, respect that. Okay. And at that point, what do you think is the biggest change in your, I think, perspective or like your mentality in trading, going from trading, I guess, what most people consider smaller size to going to where you are in such a short time overall?
Sorry, could you repeat that?
So in terms of like, I guess for you, I think the biggest thing that you told me is you never were expecting to be doing this much and making this much. So what do you think gave you that mentality, that perspective, that, I guess, hard work to get to the point you're at?
Consistency, and a lot of people take that very lightly, but I didn't start sizing up until I was consistent for over 8 to 10 weeks. I think I was green for 8 to 10 weeks with the same small size, and it was only then that I decided to start sizing up. Another thing that's really important is if you're trying to start sizing up and increasing your your profits, or you're trying to take your trading to the next level, you've also got to pick when you size up. So I think it was sort of convenient for me. Obviously, I didn't know this back then because I still am learning, but I think I got lucky in the sense that I decided to start sizing up at an opportune time when the market was moving, essentially, when we saw some like the big tech companies making big moves. So if you do plan on to start sizing up and taking your trading to the next game, make sure that the market is in the right sort of direction, in the right sort of sentiment for you to take advantage of those moves. Because if you start sizing up and even if you were consistent before this, and you start sizing up in this kind of market, I don't think it's going to work out too well, because the market's just not giving you those opportunities.
So basically to recognize that the market that you were consistent in might not be the market we're in now. And that type of idea, to recognize that even if you're consistent for 2 months in a bull market, it might not be the same in this type of, I guess, choppy market.
100%. You've got to always adjust your expectations from the market, because it's not always going to be good. You know, there are going to be months where it's just complete chop and you cannot expect to make big money during those months. So like I had 2 really big months in July and August, but now it's September and I'm not even scraping. I think I'm barely scraping 1/3 of what I did in the past 2 months. And I think I'm okay. I'm definitely okay with that, because I know that the market's not presenting the opportunities that it did in the past 2 months.
Okay. So before we get to the live trading, like the trading examples, you mentioned the tape earlier. My quick question about the tape is, how do you suggest that? I guess you had SML to teach you a little bit, but I'm pretty sure that no one learns the tape just by watching a few videos, hearing people say. So what do you advise? Like, I've heard people say, stare at the tape, watch it the whole day. But in that learning phase of the tape, I guess you're more at a point, well, we're all always learning to read the tape better. But I guess you're at a point now where you're more confident in your tape reading. What do you suggest people do to become more confident in their tape reading, and what should they look for overall?
So, I mean, becoming comfortable with reading the tape comes really from putting in the screen time. But then don't get confused with just, looking at the tape through and through the entire day, because you're not going to learn anything from that. You have to look at the tape at those key levels when it actually matters. Because if you're trying to read the tape in the middle of a range or just in the middle of the day, essentially, where it's just chopping around in the middle, you're not going to be able to grab anything, or you're not going to be able to grasp anything that's useful from the tape. So you want to understand how it moves around the critical levels where you're trying to scalp.
So before you continue on that, one really like important thing I think about not looking at the tape during chop is when I was, I guess, more of a beginner, I used to watch the tape trying to predict every next move the whole day for hours, because I kept hearing the tape is the holy grail. All institutional traders use the tape. And I came to this realization much later, which helped with my clarity a lot more in terms of tape reading. So I think that's something that you don't hear said much, but is like so important overall. The tape is not telling you what's going to happen next. It's just helping you understand at key levels what you're seeing. So quickly
100%.
About the tape. So what do you look for? Let's just talk about on the long side, since it's just reversed. On the long side, what exactly do you look for on the tape before and after of the breakouts? That's what we're talking about.
Okay, so again, this changes with the market and the stock that you're watching, but we can talk about something that I've understood with Tesla, since it's had the split, and in the past week I've sort of been looking at the tape and how it moves for the long side. So I'll just talk about how what I've realized with Tesla. So let's say we're breaking a key level on Tesla. Let's say it's 450. This is an example. I don't have a recording or anything,
Yeah, that's right.
but this is what I've realized. So let's say it's Tesla at 450. We'll see some size on the ask side on level 2, right? So let's say it's around 200, which is about 20,000 sellers, or 20,000 sellers on the ask side. So what we'll see is we'll probably see it. We'll see the tape pushing. We'll see the ask hit 450. We'll see the last hitting 450, which is basically more aggressive buying, and that's showcasing that the buyers want to push the level up. And we'll also see the bids slowly pushing up as well. So let's say the bids are at 449.4, the ask is at 450. We see the bids crawling up to 449.5, 449.6, 7, 8. And we'll see that the size on the ask is slowly dropping. So it was 200, now it's maybe 100. And then with Tesla, the thing is there'll just be that one big seller, and it could definitely be market makers just trying to fake you out. But we'll see that entire size on the ask is just going to disappear, and it's essentially going to break right through. But the thing I've realized with Tesla is, on the tape at least, is it'll break that level. It'll break 450, right? It'll maybe go to 450.5 in a split second, and then it's going to drop back down. The ask is going to drop way back down to 449.99, and it's just going to hold there. And you'll see that the orders executing will be 449.8, 449.5, and the bids will still hold around 449.5, 449.4. And this is something that I've realized with Tesla. So like it'll break, and then within that same minute, it'll drop back down under the critical level, and it'll drop maybe 50 cents to around $1 under the critical level. And then in literally another 30 seconds, it's going to run back up to 450, and it'll break 450. It'll probably go to 452.
So on that note, let's just talk about a quick thing related to this. So when you enter, are you looking to wait till that first pop happens and re-enter as it pushes up? Or what I personally do is I enter as I see what you just described. I look for almost the same thing. I enter right as this happens, as I see it getting smaller and SPY's pushing and Tesla's holding. And I try to get filled on the pop, and I re-enter again as we get that first bull flag, first pullback, first retest, whatever it is. So do you personally find that it helps you to wait till this first breakout happens and enter only after? Or do you try to play both the first pop and the continuation?
So for me, what I'll do is I'll try and enter half my position that I've decided to enter on the first pop, in the small chance that it does just break and run, because I'm looking at that and I don't want to miss it, right? So I'll enter half my position size so that even if it doesn't end up going, I'll cut my loss and I'll know when to, and I'll be able to exit. But if in the small chance that it does run, I'm still capturing it. But what I've realized is, because it usually breaks and then pulls back and then continues again in almost like under a minute, I'll enter half my position on the first pop, and then I'll wait to see if the bids are able to hold maybe 449.5, 449 or just 449. And then when I see that it breaks the 450 mark, and then the bids hold 450 on the tape, and I see the orders executing above 450, that's when I'll enter the full position, and then I'll try and capture the move to 451 or 452, wherever it does reject next.
Okay, perfect. And in terms of this, just something I really quickly want to add to this is specifically for Tesla, how it moves. And what we notice is what Arshad described in this first part, in terms of what you should see on the ask, that applies to almost every stock. What we're talking about now is specifically the behavior of Tesla, is that first pop type of pullback thing. But to emphasize this stuff at the beginning, about what we're looking about, this is generally what you see in any breakout overall. You'll see size, you'll see bids holding, you'll see the push. But Tesla, and I think a lot of what I've noticed is overall, stocks that are overall more volatile, you'll see this type of pop, pullback, push type idea. And I think especially on Tesla and Amazon, we see it a lot, and their behaviors being similar. Except I think in Amazon, I think Amazon, you see that spread thing even more clearer, the push in bids and asks, because of how wide the spread is. Normally it's $5-6 spreads and chops with 20-cent spreads as we get a push. So I think that's something really interesting. So I guess here, is there anything you want to add about, I guess, losing and stopping out trades, or do you want to get to the choice and we'll talk about it there?
Well, it really depends on the stock again, right? So I've sort of understood how Tesla moves now. So let's say I was trading that 450 break, I'm in with half my position on the first break, and I think my stop in that sense for Tesla would be around, if I see that the bids aren't able to hold 449 maybe, that's what I take my exit. I'll try to look at the time of the candle as well, because sometimes it can also be, just weak hands exiting their positions. So I'm also trying to focus on what the timing of the candle is and when it's going to close. So maybe if it's like the 50th second of the 1 minute candle, it might break 449. I'll still wait that extra 10 seconds to see if it can pull back up. But other than that, I'm usually going to exit if the bids can't hold 449-ish.
Okay, perfect. On that note, in terms of losing trades, have you noticed overall that when the bids fail to hold, sorry. My question was, I forgot what I was going to say. About SPY. So when you look at SPY, will you ever exit a position seeing the market going against you, or something telling you that, for example, we'll take two situations here that I've noticed, and I think a lot of people noticed if you've been trading for a little bit, is the first one is when we see SPY pushing, but the stock doesn't continue push, or fails to, or you anticipate a break on it, or fails to break. And the second is you get SPY starts to fail or go against you, and the stock continues to move. So is there anything that, I think these are the two most common, feel free to add to this list if you've noticed anything else, any other patterns that you see, but these are the two that I've noticed the most in terms of what we see in market correlation. This isn't just SPY, this is SPY, QQQ, any of these, based on the stock you're trading for sure. So,
yeah, so exactly, like you said, it's definitely based on the stock you're trading. If I'm trading Tesla, for example, and it definitely does follow SPY a lot more than it used to back in the day, but it still has those moments where it's on a crazy momentum move and it's just pushing up, and you see SPY either chopping around, and sometimes, rarely so, but sometimes maybe it might be pulling back even. But it depends on the stock, right? So if I'm trading Amazon and I don't see, especially in this market, if I don't see SPY pushing in the same direction that I'm trying to trade Amazon in, I'm definitely not going to enter, because it's just not a high probability setup in that sense. But with Tesla, if I see it pushing up and I see SPY just moving sideways, but I do see the momentum in Tesla buyers stepping in, maybe I might still trade that.
Okay. So on that, I was actually looking for this exact thing about Amazon. I've noticed that Amazon, the most of any stock, SPY and Amazon move so correlated, especially maybe not during the general market, maybe even during pushes, it doesn't correlate. But recently, these last 2 days especially, we've seen dumps with SPY and Amazon are hand in hand go together. Their low of days match, everything matches. So, and in the second situation, when SPY is failing, like let's talk about generically, like Tesla and Amazon are unique in the way they move. We see sometimes we get those pushes without SPY. But do you ever look at SPY and, for example, if you're up, let's say, up a little bit on a position, hasn't reached ideally where you want it to be, but SPY starts to fail. I think that's a very common situation personally, where I see that we get that first 5% move we want, but then SPY fails to continue. The stock's just holding, chopping around, not really moving. Do you bail those positions, or do you try to scale out? What do you do in those situations?
I think it goes back to what your trading style is in that situation, right? So I'm still a scalper at the end of the day, and if I'm up a bit and I see that the position the momentum has sort of died out and the stock isn't pushing anymore. This is for the upside. The stock isn't pushing on the upside anymore, but SPY is sort of pulling back a little bit. I'm definitely going to scale out 80% of my position, because I'd rather, lock in the profits, especially when I see that the move could potentially reverse against me. I might hold a runner in case it decides to continue, but chances are I'm probably going to enter a majority of my position.
Perfect. Okay. So I guess at this point we'll get to the charts, and I think that as we go through charts, I think a lot of this will become a lot clearer. So can you guys see the charts right now?
Yeah.
Yep.
Okay. So perfect. Let's go to the first trade. Give me a second. I'm just opening the chart. Okay. So the first one is going to be Tesla, the 14th of September. So we'll go right now to the 14th. Okay. So this is the 15th. So this is the 14th of September, okay. So we'll just mark the pre-market high, I guess. So do you want me to keep my key levels, or do you want me to clear it and just put on the pre-market highs?
You can keep your key levels. You probably align with mine.
So we'll put this one. And I'm going to quickly open, I'm going to close time and sales. I'm going to open, I'm going to open, which time frames do you watch when you trade? We'll just talk about that while I open these charts.
I watch 1 minute and 5 minute when I'm scalping, but
Okay.
I do set my levels on the 15 minute and the hourly just to get a sense of direction and my larger return levels.
Okay. So we're on the 1 minute, let's go to Tesla, and we're looking for right now. On the 18th, 14th. Okay, so this is the day. I'm gonna quickly open up the same charts on the different time frames. So I think that as much as when we're scalping, we're focused on the 1 minute. When we plan the day before, when we plan in the morning, when we're looking at our pre-market things, I think the higher time frames do matter a lot, even though in the moment we might not be watching it as much. But I think that's a misconception that people have. You're scalping, it's only the 1 minute. So you want to elaborate on that a little bit? Anything you think about how important for you multi-time frames been overall?
Yeah, so definitely. So at least when I'm scalping, I need to understand the overall direction of the stock during the day, right? So I mean, you can't really grasp that from a 1 minute, because obviously it's more zoomed in on the play you're trying to catch. So you won't be able to see the larger picture. So for that, I try to look at the 15 minute, and I have the 15 minute set up with the Bollinger Bands, which is an indicator that sort of defines volatility, and that sort of helps me understand whether the stock is more bullish, more bearish, how much momentum am I seeing in it. And it's also kind of important to see the kind of volume that you're seeing on a larger time frame, so you understand, relatively speaking, that there is more volume in this sort of specific area, and the demand or supply is a little more present when you're trying to scalp over there. So for the 15 minute and the hourly, I'll set my levels and I'll sort of understand the direction of the stock. But when I'm scalping, I'm going to be looking at the 1 minute. So once I have that sense of direction established, I'm now focusing on the 1 minute and 5 minutes for my entries and exits.
Okay, perfect. So now we have the Bollinger Bands on this. On the other time frames, we just have the raw charts, no indicators right now. So we'll start with the 1 minute. As we talk about that, I guess we can go through anything else related to multiple time frames. So this trade was at 3:01 p.m.
301. Yeah. So we're talking about this is a trade I brought up just to talk about how I've been cutting my losses quickly, because especially in this kind of market where you see almost majority of the moves are fake outs. I just wanted to talk about how I'm cutting my losses in order to not take larger losses than they should be.
Okay, so I'm going to quickly put the level that I'm seeing right now that I think that your trade also came off of.
Mm-hmm.
So, yeah, this is perfect fake out. Yeah, okay. So we'll talk about this trade. So let me pinpoint exactly where it is quickly. Here's it. Okay. So it's this candle, correct?
Right. So one thing you'll notice is, can you zoom in a little more on the 1 minute?
Yeah,
A little
sure.
closer.
Is that good?
That's perfect.
Remove
So
the-
if you look at the previous candle at, I think it was 246, you'll see that it broke the 410 level, but it made a high of 410.37 if I'm not wrong, and it pulled back down. So I don't think I didn't trade that one, because what I did see is I didn't see the bids pick up above 410 on that. But on the next break, when I thought that we were going to see the next move up, I saw that the 410 level broke. I saw that volume kicked in a little bit, more than the average, and I also saw that the bids picked up above 410. And I did also notice that the 410.5 level, so this is a 50-cent increment, which is another sort of signal that the stock is more bullish in a sense. So if it breaks the 410.5, then you could potentially see a move up. So I entered on that break of once I saw the bids holding 410, and I entered for a contract price of 13.5, right? So I'm in my position, but the second I see that the bids aren't able to hold, I'm still in my position through the 301 p.m. candle. But then once I see that the bids aren't able to hold, and then the ask drops below 410, and I see more aggressive selling in that sense, I'm out 10 seconds into the 302 candle. I'm out of my full position at 13.1. Half my position 13.1 and half my position 13.17. So I'm almost. Yeah.
So on this trade, you entered exactly as 410 broke, or did you enter a little bit before?
I entered after 410 broke, because what I saw earlier was it would break 410. It broke 410, I think, a bunch of times, and it would fake out over there. So what I was looking for now was I was looking for the volume to pick up a little bit. I was looking for a little more aggression on the tape, and I was looking for the bids to hold 410 before I actually entered my position.
Okay. And I don't know if you took this into account. I'm pretty sure you had your key level set up. So on my hourly, I was just looking at this because I had a little blue line next to this on the 5 and 15. So for me, this was like a relative level, not a major level, but something that I was watching. So I looked over on the 1 hour chart, and I noticed that we get a consolidation, we get another previous day's retest of this area, we get a break and a rip another day. And this whole area has been tested multiple times. Did any of that come into account when you took the trade in terms of why you were focused on this level, and why you even noticed that it was exactly 410 where it failed multiple times and you were looking for a continuation move?
Right. So I had the same 410 level, and I knew that it was tested a bunch of times in the past couple of days as well. But what I was looking for was a quick momentum push above that break for the high of day as well. So we have a few things that's clicking in that sense. It's not a key level or anything. It is a relative level on the intraday time frame, not a larger time frame. So what I was looking for was a quick high of day momentum push, maybe to 412, and I would probably scalp that and take my profits somewhere over there. Obviously, we didn't get that, so I just cut my losses as soon as I saw that we weren't going to get that move, and in that breakout over there.
Sure. So I set this pink level, just for everyone who watches it later, exactly where previous high of day was, and this is as clean as the setup almost perfectly was. And I think something that Arshad didn't emphasize too much, but I think that's really important that he said, is how on this first breakout, which this is, in my opinion, from a candle perspective, almost perfect in terms of how it looks. You get that trade, it breaks, but he knows that the bids aren't holding. I'm guessing based on the volume, without even seeing the level two, I'm guessing that there was sellers up in this area based on how much volume came in after rejecting. I'm guessing that when you look to get in, you notice those two things, both a fail of bids holding and sellers right above the level, which means you'll avoid that trade. And I think that this is, if we could really just watch the tape here, I think it would be really clear if you knew what you were looking for, that this wasn't a perfect trade in terms of the tape, but this is when he emphasized the tape earlier. I think this is what makes it important. If you look at this blindly with no tape, I think this is what we would call an A+ setup, almost blindly without a tape. But I think with the tape, it's clear. So there was one other thing you said that I wanted to talk about a little before we get to the next trade. Let me clear this. So you said that it's what you call an intraday important level, but it's not a critical level. And I think that's something that's missed by a lot of traders overall. Like it took me a while personally to understand this. But when we say that there's critical levels, key levels, when you think about levels, can you tell me like how you kind of think about them?
So I mean, I set up my levels in a specific way almost. So what I do is I have the multi time frame analysis thing going on. So I'll have critical levels that are present on a daily and a 4-hour even, just to have a better selection of the exact price that I'm looking at. But I'll look at the daily and the 4-hour for more critical levels. And the thing is, with 4-hour candles and daily candles, you're more so looking at a range rather than just a single price.
Sure, yes.
Because when you're looking at the daily chart, you'll see those huge wicks, and you won't exactly know where the specific level is in that sense. So let's just do an example over here. I think what you've marked out is 460.
Yeah.
Could you just move your arrow? Yeah. So if you look in the past as well, right? So you have it hitting you don't have to zoom in over there.
Yeah.
I'm looking at the daily over there. So you'll see a little bit of rejection between 460 and 462.
Yep, this area, yeah.
So it's more so just a range. Of course, you do take into account the psychological rounding. So 460 is obviously an increment of 10, and you'll probably see a lot more accumulation of buyers or sellers on that specific level. But what I do is I have more critical levels for the daily, where you see those rejections day in day out on a larger time frame, and then when you move down to the hourly and not the 15 minutes so much so, but the 15-minute chart helps you adjust those hourly levels to get it to be a little more precise.
So to make this a little bit clearer, so when you're talking about key levels, you're more looking for either levels that have been tested multiple times on the daily or ranges on the 4-hour daily, that type of thing, instead of just any price point that's been tested.
Yeah, you'll see that a level gets tested a bunch of times, but then you'll also see those wicks that form. So it'll break that level, but it'll also pull back down, right? So you'll essentially have a range then between the level that it broke and the price that it was able to reach, essentially. So I'm trying to find a good example on the Tesla chart right now, but can you but can you focus around the 385-ish level, I think? A little further down. So you'll see two huge wicks over there on the downside and the upside. 380, yeah, something like that.
I think this area, right?
Yeah. So you see that between 385 and 395-ish, there's a bunch of wicks in that area, and then sorry, go ahead.
So when we're talking about a range, I think this is what you mean. This whole area more of, we'll see a lot of rejections, we'll see wicking, and when we get out of this area, I think
you tend to see a lot more choppy action rather than when you actually break that level. You will tend to see a little more cleaner moving price action.
Yep. So I think the biggest thing to emphasize here is how Arshad said that we'll see more of a range, number one, on these critical levels, and number two, that we'll see that it's never just an exact price point. Sure, intraday 460 is probably what's going to end up mattering, but personally, when I look at this, what I'm seeing an area of rejection that we'll get from here just slightly above 460. And we see that this area has been tested before, and I think that's what really matters, to recognize that these are more ranges, and this is the area where you might take the first break on this area, but after that you don't want to trade until it gets fully out of this area. And I think something else is, when you set key levels intraday, do you ever adjust those levels to the exact price points where action's happening? How do you deal with the fact that levels are never like precise when you set them on the 4-hour, 1 hour, 15 minutes? Because that's a question I've been asked, and I've seen a lot of people have. Like, if I set my levels on the hourly, they would never match up exactly on the 1 minute. So how do you manage that? What do you do?
One thing I do that sort of makes sense to me is I'll set my levels on the hourly, and then I'll go to the 50-minute to see the wicks that form around that level, right? So let's say we have a level at 398, and then I see wicks all the way from 390. Okay, 398 is not really a good example. Let's say 404. So on the hourly, that might look like a level, but then you go to the 15-minute, you see a bunch of wicks, and you'll sort of adjust it to 404.5. on the 15-minute. This is an example again.
Sure.
But then what you want to look for is, again, you have to consider that there's a critical psychological level right at 405 because it's a $5 increment, right? So that's probably where you're going to see the most demand and supply. So if you can adjust that and move it to around 405, that just makes a little more sense.
Sure. That makes I think that makes a lot of sense, and I think if you take these things into account when you're trading, you can really see like these levels match up a lot. For me personally, I do exactly what you said. I'll look at the 15 a lot to adjust my levels in intraday. I'm never like my levels up at 462.2, so I'm not going to trade a 460 break because the level's too close. I just recognize that this line represents an area more, and now I'm looking intraday for action near that area. But this is something I've never thought about too much before, which now when you say it makes a lot of sense. There's certain areas where you want to be more careful. You can expect more chop compared to what you would expect when you're getting this run up. So for example, here we might get a clear break as we break 400, but after that we'll see a little bit of chop before continuation. So I think that's something really useful that you explained. So let's now get to the next trade. Let me look. Let's see. Okay. So this trade was same day, 14/12/24 p.m. Oh, I went too far back. 9:15, 9:14. Okay. And this trade was at 12. Oh, I remember this. This was fun. 12:24 right here. Okay.
12:24.
So I'm guessing this was a short position, correct?
Right.
Okay.
So I was looking at the 3140 level, but I saw that it broke a couple of times and it was faking, I think, between 3140 and 3138. The key level I was looking for was 3140, but obviously it was already faking out around that level. And 1224 was actually my entry, the green candle, the first green candle. Obviously, it didn't look that way when I entered. It was looking a little more bearish. And I saw that it broke through 3140 a bunch of times. And I saw the 31, I believe I saw the 3138 break on the bid side. But one thing, this is a mistake that I made, that when I was reading the tape, even though I saw that the bids broke 3138, I saw that I didn't notice this at the time because I sort of just entered prematurely. Because it already tested that level so many times. Even though the bids broke 3138, this is something specific to Amazon, the last was actually executing closer to the ask, and it wasn't even executing under 3138. So with Amazon specifically, you also it's not so much as when the level breaks on the bid side or the ask side. So like for the downside, you're looking for the bid to break. If the bid breaks, you still have to focus on whether the last is executing below the level that you're looking at. And if it's not, that means that the sellers in this case, they still weren't as aggressive as they needed to be to push the stock down.
Perfect. Okay.
So I'll just go through my entries and exits. So I think I entered 12:24, 16 seconds in. I entered a very spiked premium of 41. And then I exited, I think about 30 seconds later, once I saw that the ask had broken above 3140. And the lasts were executing above 3140. I exited for 40.
Okay, so you sold at 40.
Yeah.
Okay. And this is actually a question that I've had. I don't think this might be something that, I don't know. So you were talking about how the last on Amazon is important. So personally, I've noticed that Amazon gaps extremely a lot on the 1 minute chart compared to any other stock you'll ever trade. You'll see this consistent type of, I guess, gapping thing where you're not seeing, I guess, open to close, opening consistently at the same price. And you'll see that Amazon, let me try to show you an example. So let's see. So for example, Amazon, I'm trying to find a good example of this, but I don't know if you know what I'm specifically talking about. Right here, right? Yeah. This type of thing. So do you know why it does that? Why? Because I've rarely seen this on other 1 minute charts. I've seen it a few times, but I rarely see this type of gapping type of behavior on short. So do you know why?
You usually see the gapping sort of behavior between candles when the volume is extremely low, right? So if you go to an example of where the gap occurs. So you look at the volume between those two candles,
Okay.
and you'll notice that it's extremely low. And that happens because, like, obviously it's because the last execution for the candle before the gap was at a certain price. But because the volume is so low, you're not seeing that sort of liquidity between the price. So the next order that goes through, it doesn't necessarily have to be at the same price or even close to the same price that was the last order of the previous minute's candle. And you usually only notice this happen around low volume hours.
Okay, that makes sense. So dead volume mainly. Okay. So that's just a curious thing that I found interesting that I think people have noticed if you trade Amazon a lot, I guess. So let's look at the next trade. Oh, so I forgot to mention this earlier, but right now we're looking at primarily losing trades because I think with me and Arshad both feel is most people catch decent winning trades. Maybe your entries are a little off, a little late, but the bulk of the time, the difference between guys like Arshad who are consistently profitable and even taking only small L's, even doing a chop market like this, is knowing where to cut their losses. Personally, I feel that most traders that are newer to scalping cut this once they're up here or even further, because this candle gives you hope again as it pushes back down and you end up cutting only up here as like, and I'm guessing by that time, if you looked at the chart for a $41 contract, you're down to $36.35 up here versus the $100 loss from 40 to 41 to 40 over here. So I just think that this personally, looking at losses, knowing exactly where to cut. And I love how Arshad explains the tape, what he's seeing and what he's noticing about bids and asks not holding. And I think that if you take this into account, maybe remember exactly what to look for on the tape, you can much quicker cut losers versus waiting for it to spike against you or hit your max stop. Because I'm sure we all have a hard stop on our position where we know in our head this is where we cut. But hopefully 60 to 70% of the time you're not waiting all the way till then. So anything you want to elaborate on that idea, cutting a little bit earlier versus having a hard stop while I pull up the next trade?
I think we'll probably get to this later on, but if you notice that I took this trade at around 12:24, which is essentially just midday chop, I think it's really important, and this is something that I've been struggling with myself as well, is just over trading during hours where it just doesn't make sense almost, especially in this market. You'll notice that majority of the plays that have good momentum, good volume will happen during the mornings, like the first 1-2 hours, or maybe in the last 1 hour. So I think picking the trades that you take is so important, especially in this market. I think it's best if you're green, especially in the morning, in the first hour or two, you just walk away, because anything after that in the middle of the day, even if you think that something's moving, it's definitely not moving as cleanly as you think. So 1 minute can be really deceiving. So if you see, like, for example, on that break of 31.40 for Amazon, what I saw is, oh shit, it broke, and it's gonna continue on the downside. I'm gonna be profitable. But the thing is, it might look like that in one instant, and the next second it's gonna pull away from you, just because it's the middle of the day and you're just generally gonna expect more pullbacks and fake outs. So I think in a market where we're not seeing as much action as we'd like, and in a market where you're definitely getting more chop, trading the hours where there's more momentum and more direction is far more important than just sitting around watching the charts all day.
Perfect. And I think something that's really interesting about that point is when you have times of low volume, especially, you just avoid it. Like I've seen like perfect setups during lunchtime where you think you're gonna run and you're at a critical level, everything's lining up, tape looks good, but what you notice is you're just not getting volume, and that's where I guess the most fake outs happen overall. And I think that's something important that's underestimated a lot. So this is the 1101 trade on Tesla. I think the 1101 is exactly
15th, right? Or what day is this?
This is the 15th. It's up here. 1101 is this candle.
Okay, yeah, I got it.
Let me just draw the arrow for the entry. 1101 is right here. It's right there.
Right, so over here is I took it's the high of day break for Tesla, and like I explained earlier, I saw that if it breaks the key level, you'll probably see that pullback that happens on the tape, and then we'll see a continuation run. But the reason, and we did see the continuation run, but I'm talking about two entries that I took. So I entered at 1101 after the pullback. I saw that momentum build back up again. So I entered around 444. But if you look at the 1102 candle, you notice that it has a wick on the downside as well. So if you see 444, it breaks, but then on the 1102 candle, we'll see that the wick showcases that it actually dropped back down before it even pushed back up. So I entered at 1101, right? I entered at 1101, 11 seconds for a premium of 15.8. And I was looking for that continuation move on the 1102 candle, 1103 candle maybe. And it did happen. But when I saw that wick break below 443, I wouldn't say I panic sold. I think I followed my plan in that sense, because I saw that the bids broke 443 and I just wanted to exit my position, because in the chance that it was going to reverse, I wouldn't want to be stuck in that. So I exited my position for 15.4. So I entered at 15.8 and then exited at 15.4. But when I did see that the volume picked up immensely and it started continuing up, I re-entered my position. I think that's important, because when you're scalping, if you have tighter stops, you're stopping yourself from taking a larger loss, and you can always re-enter in that sense. So I'll just tell you my re-entry. I re-entered at, again, literally the same price at 15.8 on the 1102 candle when I saw the momentum kicking up, and then I exited half my position for 16.6, and then I scaled out I kept scaling out as it kept pushing up. For exits at 16.97, 17.3, 17.5. So if you notice, what I did there was I cut my loss quick, and I think I took about a $400 loss on that pullback, but I ended up making about 1,000 on that entire run up. So I was still able to outset my loss with the profit that I gained from the continuation move. And in that sense, essentially what I did was I cut my loss quickly, and I was still able to re-enter and then catch the move back up.
I think the big thing that you mentioned here is big win and small losses. And I personally think that the thing that's underestimated about scalping is you over and over here, I guess, newer and even experienced traders say things like, it's hard to manage risk on options, it's hard to cut your losses quickly on scalps, you have to hold, you have to have hard stops. And I think the point that this illustrates is, no matter what account you're trading with, you have to recognize that, if I do that, you have to recognize that you can cut and re-enter. If you don't, my personal opinion, I think that Arshad, you can elaborate on this a little bit. If you don't re-enter, you're probably going to miss a lot of the time. Like, I've seen hundreds of moves where first time fails, second time runs. And I think that no matter what, you just readjust, you recognize. But I think you can elaborate on this better than I can. I think there's a fine line between re-entering because the setup is presenting a good setup to you now again, versus re-entering just to make back your loss. So I think that's something that people don't think about when we talk about re-entry. Can you elaborate on that a little bit?
You made a good point there. Re-entering because the setup looks good, and then re-entering because you just want to make back the loss. And I think that's really important, because the reason I took this trade in the first place was because there was momentum, and I did see that the buyers were more aggressive. Obviously, the first time I tried entering, it didn't go my way. So what was important in that sense was that just that I cut my loss quickly. But the reason I re-entered in this situation was because the setup still looked good. It just wasn't as clean as I hoped it would be initially. So if the setup wasn't looking good, and maybe there wasn't momentum and there wasn't aggression on the tape, I probably wouldn't have re-entered, just because I still don't think it's a good setup, and I would accept the loss and walk away and wait for a different setup to present itself. But in this situation, it's a lot different, because the setup still looked good to me, and the volume and the buying pressure was still present. So I was happy to take my loss, but then look for a re-entry if the opportunity did present itself, which it did in literally the same candle itself.
Okay, perfect. So about this trade, this brings up another concept I want to ask you about. So a lot of the times we hear the phrase, don't take a trade once the stock is extended. Some people say after 180 or don't trade it. What's your opinion on that concept? And how many times, for example, when something's, either we get these pumps on Tesla and lately the dumps on Amazon, we're just going down 50, 100 points with just pullback continuation. Do you stick to the first two moves, or will you keep going, just sizing down and being more careful as it gets more extended?
So the reason, it really depends, right? Because I'm scalping, and at this point, like, if I'm trading a move that looks extended, so to speak, I'm not looking to stay in that position and try and capture the next $10 move up. It's not going to happen essentially.
Sure.
So if a stock looks extended to me, I'm not going to enter. If it has 5 straight green candles, I'm going to probably wait for the pullback on the 1 minute. But at that point, once that pullback happens and I still see the momentum going in, it's not really extended to a point because I'm not looking to capture the next $10 move on Tesla. I'm looking to capture a 1-2 point move and then exit and take profits.
Sure. And this brings up one more question related to this extension concept. So I'm going to draw this one out, and I know this has been talked about before, but I have a few questions about it. So what we end up getting is we get a higher day and we get a range, and sometimes what we see is we get this dip and we get this parabolic like 5 candle rip through a level. So I've heard multiple things about this type of break, and what I've heard is 1, take small size and play it. 2, don't touch it, you get commune spikes. So what's your opinion? Because I think that, well, not lately, we've been seeing this to the short side lately, but to the long side, what's your opinion on this type of thing where we get a clear range, we have a good tested level, but on the break we don't get that neat, like this type of idea? It's actually right here where we get this neat test and then we get a breakthrough. Rather, we get this parabolic. For example, this chart actually presents 2 good examples of this.
I believe Zoom did this on Friday. I don't know if it was Friday or Thursday. And I did take this trade, this exact setup which you said, that it will pull back and then it has this parabolic move. But I think the key, what I would do is I would look at the momentum, and if I see that momentum, I'll probably enter with lighter size than I usually would, because I don't think it's gonna run too far before faking out. I think that was it.
Up here?
Yeah.
See, this exact setup I really wanted to take, but I waited for this bull flag, which I got a little bit off of, mainly because of that concept we were talking about, where when it's extended, logically to me, this looks really nice. But when you think about it, I try to think in my mind, what will this look like if it's a good setup? Like if it works my favor, what will it look by? And the only stock I can imagine getting another 3 candles up after this is Tesla. I just cannot see getting 4 parabolic candles on Zoom. Or 4 parabolic.
No, that makes sense, and I wouldn't call this the best setup either.
Yeah,
but
sure.
Like I said, when you're reading the tape and you see that bullish momentum, you see the buying aggression happening, and you know that 420. I think the pre-market high was 420, and then the high of the day was 420. A lot of things aligned in that sense as well. So even though it didn't really have that pullback that you want to see, that consolidation period and then the break, I still think, in a sense, there is a good chance that we're going to see a quick push up, and especially if you're scalping, you'll see that quick push up where you can make a little bit and then you can exit quickly, and especially on these kinds of trades, you're looking to exit quickly because there has been not much of a consolidation before this push up.
Yeah, and if I may add to some of that, I know I haven't really been talking, especially since you guys have been doing so well, but with the couple of times I've traded Zoom in the past couple of weeks, I've actually had all green trades with Zoom. But something I've noticed a lot is that when Zoom reverses, it just reverses, and after it reverses, it will pop back up. Like it makes a big move downwards. I mean, it pushes up, moves down towards the same support or near the same support, and then continues to push up.
I personally have found that pattern you're talking about, and I think one thing to mention related to that is commune crushes I've noticed mainly Zoom and beyond have these insane commune crushes where if you get long here and you hold through this, even if you got long here, it comes back to your entry price. Your commune will be down 20% here. And I think that's something that's not as bad with Tesla and Amazon. It's still bad compared to like anything, but with Zoom and beyond mainly, I have no clue why these 2 stocks, but these 2, you see that communes just get destroyed and hyped up a lot versus what you would expect overall. So
I think that happens because of the IV spike, and when you see the pullback, the IV essentially gets crushed more so than just the stock pulling back. The IV is what's pulling back harder than the stock.
So I actually want to go back to that last trade really quickly because there's something I want to ask you about regarding that kind of, I wouldn't call it a pullback entry, but I'd call it that that was on the 15th, right? Yeah. 15th, and it was, I think, let me check the exact time of that trading, and there's something I want to ask you related to that really quick before we go to the next.
11 a.m. I think.
11 a.m. Okay. So when you're looking, no, this is technically right here. No, right here. Okay. So when you're looking at this area, so I personally trade looking for this type of break, try to get in a little bit before the high of day so we can get, I guess, an IV spike. So when you're looking at the tape on this type of setup, we see these a lot on runners, this type of flag setup, where you get a flag. What have you noticed? For example, these three setups look the same to me almost in terms of price action. But what do you think differentiates this first one, which I still think is profitable if you enter here, versus this last one where you just get a pop and it failed? Do you think that there's something different on the tape, or do you think it all comes down to how quick you exit these trades?
Personally, I don't think you can actually control or try to understand every single move in the market. I mean, because there would be a book on like hacking the market or something like that if that was the case, right? So you can't exactly predict when volume's gonna kick in and if this move is gonna continue. You just have to execute based on your plan. Now with me, the thing is, I don't like to draw out flags on the 1 minute too often, just because I don't think they work as much as maybe larger time frames do. So I try not to focus on those trend line breakouts or flag breakouts on the 1 minute. But of course, I know that you do it as well, and it does make sense. If it does make sense for you, then it works for you. But yeah, I don't think there's much of a difference in a sense that you can analyze for each breakout. You can just look at the tape, you can see the buying aggression, you can execute, and then you just have to exit quickly if it doesn't go your way.
Yep. Yeah, so what the biggest thing to exit quickly, I think that's so missed. Like for me personally, logically, if you look at this trade, high of days up over here, you get that breakout. Let's just say you're playing a continuation. Your logical stop, if you asked any trader, is down at the low, like down at the level. That's where you're hoping it holds. But when you're scalping, I don't think me or you or anybody that's been scalping for a while holds till we get down back to here. For us, if
it
we
really,
don't...
at the end of the day, it depends on your plan. So like, let's say if my plan was to enter at that break and then have the stop at 445, I think is where you drew the level. I wouldn't be entering the same maybe 10 contract size that I was, because I'm not willing to take a loss on 10 contracts if it does break that 445 and it doesn't hold that level. So I mean, it depends on your plan. If I was going to enter for that break and then hold till it stops out at 445, I'd probably only enter like 1 or 2 contracts.
Yep. So let's look at the other thing. And while we go to this trade, what we just talked about was sizing related to trades you take. So I know that something that I don't think if everyone knows is something unique that I know you do is how you manage your size inside the day based on how you're doing, how much you're willing to risk, setups, all of that. I think you're one of the best in terms of what I've seen is sizing management. Since I've talked to you for a while, I've seen like how well you manage your size. So what's your perspective on that, and also the perspective of people saying stuff like, I went from green to red on one trade after 5 winners, or I like blew my day's profits, week's profits in a singular trade. So what's your perspective on that? How do you manage it so well? Because I've never seen you ever tell me that you've lost a day's profit on a singular trade. Like for you, it's a big loss.
I think I did that on Friday. It does happen to me too, but then when that happens, it's 100% down to just emotionally trading.
Yeah.
And I can 100% guarantee that on Friday I did that. I did manage to lose. I think I was up 1,000 for the day, and I ended up giving back the entire 1,000 in one trade. And that's just because I was trading emotionally at that point. I was over trading. But when selecting your size for a trade on a general basis, I think, especially in this market, you'll see more volume in the beginning of the day. Sometimes you don't even see volume in the beginning of the day. But I think it's important that you capitalize, and if you are trading more size, you capitalize when there is more momentum and more volume in the market, when there's some sort of direction. And when you see the volume and the momentum is dying out, that's when you either size down or you walk away.
Perfect. Okay. So I think that's really important. I think even on small accounts, even with small size, I still think you can manage your size, even with 2-3 contracts. Personally, what I've noticed is I think not everybody does this, but I think a lot of people, you build your cushion on the day, you size up as you get better setups. And as you notice, like, sure, sometimes you want to trade during lunch. Sometimes you see a setup that you feel is going to run during lunch, but you never take big size on that. Personally, you've told me multiple times, I've texted you, I see the setup inside the day at like lunch, 1 o'clock, 2 o'clock. and you like first, like I know that you say it's lunchtime, be careful, and that type of thing. I think it all comes down to sizing. Instead of saying no, I will only take A plus setups. Instead, you recognize this isn't the best setup. Let me take smaller size, so you can capitalize. You don't get FOMO. You don't miss out on trades, but instead you know where you're gonna make your money, where you're just trading because you think there's a good chance that it might continue.
Yeah. So one thing that I wanted to do this weekend, especially, was because we're having a choppy market, I wanted to analyze my trades and see how successful I was in the beginning of the day compared to in the middle of the day and towards the end of the day. So I haven't got around to it yet, but what sort of hit me as an idea was I would take larger size in the beginning of the day, maybe like 10 contracts. This is an example, 10 contracts on Tesla or 5 contracts on Amazon, or when the market is hot and there's more volume and there's more direction. And then for the rest of the day, be it if there is momentum, be it there's no momentum, I'm still going to just be maxing out at 2 contracts, just because I know that the type of market we're in, we're probably going to see more fake outs than actual continuation moves.
Yep, makes a lot of sense. So this is your next trade, the Amazon 16th, 1033. Oh no, this is the 18th, my bad. Okay. That was still a good setup though. Amazon, this is the 16th, and 1033 is the time we're looking at. Okay. So this is exactly what this looked like. So looking at this, what I see is a nice A plus setup with a double tested low after a low day break. Looks good to me without seeing the tape. And I would be seeing 3130, a little bit of caution here. It looks good to me. So you tell me.
Could you move 1 candle ahead?
1 candle ahead.
Okay, that makes a lot more sense. Yeah. So what I was looking for is I entered. I think the low of the day on that day was 31.32, if I'm not wrong. I think I scaled in at the break of the low of the day, and you can see the volume spiked up a little bit on that low of day break, and SPY was aligning with Amazon as well. But so I scaled in half my position, a little less than half my position at the 31.32 break. Oh no, I actually entered the previous one.
This candle?
Yeah, I got faked out. This is the loss. I would have probably made money if I caught that one. Right. So I entered a small position at the 31.32 break, and then my plan was to add if we got the break of 31.30, which we did. So I added a little bit on the 31.30 break, and I think I entered at 10:33, 20 seconds in, right? But this was, I think, a lot more. It had to do with the emotions. I think I panic sold it prematurely, even though it was a fake out initially. I think I still panic sold it a little too early. But I exited before the candle even closed. I think I exited 10:33, 53 seconds. I exited like a little more than half my position for, I think, a little less than break even, so a small loss. And then I exited the other half of my position. So if you the half of my position at the 10:34 candle, we see that it pushed down. I think it made a low of 31.26, if I remember correct. I think it was 31.26.
Quick question as we talk about this. So this candle, since we can't see exactly how it forms and I can't go down anymore, so did the push up come before the push down, or the push down came before the push up?
The push down came before the push up.
Okay.
I think it reached 31.26, and I was still holding, I think, 40% of my position. I panic sold the position earlier on the 33 candle itself, but I was still holding 40% of my position. And I could have taken profits there, but instead I decided to hold it, and obviously that turned against me, and I ended up selling the remaining of my position when I saw that the 31.30 couldn't hold on the ask side. So I exited that for like a $700 loss. My entries were 28.85, and then I added a 29.95, and that was a really spiked premium at that point. And then I sold half my position for 29.35, and then the other half for 29.32.
Okay. So when you looked at this setup, did it ever concern you that this is down a few candles, or was the tape clean enough that you were more confident that we should at least see a flush near 3130?
I expected a flush because we tested that level a bunch of times, and we picked up a bunch of times before that. So I thought that I saw the sellers pick up in momentum, and we saw the volume spike on that candle. So I assumed and presumed that we were going to have a nice little move down, which I think we did later on if I had held it, but that wasn't my plan. So what I did was I exited my position when I saw that rejection of the 31.26 level.
So for you, you prefer to wait till this psychological number breaks versus getting in at the actual tested low day. You'd rather just wait a few seconds, get in near 31.30, below 31.30, instead of entering at this, I guess, 31.32-ish, where we like bounced off like 4 times-ish area. Right,
exactly. So what I did was I scaled in 40% of my position, 40% of my position at the low of the day, so that in case we did flush straight through 31.30, I would get a lower price and I would be able to average down essentially. And then I entered once we got the 31.30 break, the entire position that I had planned out to enter. So I think scaling in was a good thing I did over here, which is something that I tried to do when possible.
Yes. So I think something else you said earlier in passing that I don't think that most people know is you said you scaled out of the loser. So I think most people always think that when you stop out like on your whole position. So I personally do scale out a little bit on losers. I prefer if I'm in 5, hold maybe 2 to see if we can get a flush down a little bit and cut 3 or like cut the bulk of the size the second you're seeing you're going wrong. So can you expand on that concept a little bit? I think that's something that people rarely talk about. It really helps.
Right. So I usually do scale out, especially when taking profits more so than when cutting losses. But in this case, I scaled out. I essentially just panic sold 60% of my position because I was already very skeptical about the market and the pullbacks, right? So I scaled out 60% of my position when I didn't see the straight flush to 31.30 on that break. But it didn't really hit my hard stop. It didn't really hit my like the price that I would exit my full position at, because I would probably exit my full position if this was just on the break of 31.30, right? So I'll probably exit my full position if the bids broke back above 31.30 and you'd see the last executing above 31.30 consistently. And that would be the point where I exited my entire position. But I don't think we got that. Like I'm saying, I exited prematurely in that case. But yeah, I would probably hard stop out my entire position if I see that for the downside, I see that the last is consistently executing above the critical level and the bids then push up above that level.
Sure, yeah. Okay, so I think that makes a lot of sense, and I think that scaling out is something that if you have size at least, or if you have the capability to get in and out well, you do that a little bit more. That I think helps a lot. Did you begin with the scaling in and out at the beginning, or is that something you picked up later as you started trading?
I can't hear you.
So can you hear me now?
Can you hear me?
Yeah, I can hear you. Can you hear me?
Okay, I can't hear you. I don't know what happened.
Okay. Emiliano, can you hear me?
Yeah, I can hear you perfectly, but can you, Arshad, can you hear me?
Yeah, I can hear you.
Okay, so you hear Jay?
Yeah, I can. I think I can.
Can you?
Yeah.
Jay, talk again.
Okay, perfect. You can hear me. So the scaling out idea, did you pick that up at the beginning of trading, or is that something you picked up later as you started taking sides?
No, I think I picked it up later. I didn't start scaling and scaling out until I think 3 to 4 months into my trading, particularly because I didn't have enough size. Like I wasn't taking on like larger positions to be able to scale in and scale out. Yeah.
And do you think that overall that helped you a lot compared to earlier? It gave you the adaptability, flexibility to take on trades a little earlier than you would normally before, get in a little bit before the break maybe, or right as it breaks before waiting and add as you see the hold?
Eventually, yeah. Like I obviously, even with scaling in and scaling out, it's something that I had to get used to because you've got to think a lot more about exactly when you want to time your entries, when you want to scale in, when you want to scale out. So there's a lot more to think about it, but yeah, eventually I think I did get more comfortable with scaling in and scaling out than just entering a full position and then exiting a full position.
So one quick disclaimer, if you're a TD Ameritrade user, do not try this. Do not try to scale in and scale out. I guarantee you it just will not work. Like it's very difficult. But anyway, so as I open the next chart, I actually had a question that how do you deal with, I guess now you're at the point where you're more confident in your setups and you know what you're looking for. But in the beginning, I guess hesitation can be deadly in these situations. If you wait, let's say on this setup, if you wait an extra, I guess 10 seconds and you enter maybe at this bottom, or you wait for the next candle a little bit to open and push down, you're taking a 10% hit by the time you even stop out versus that almost break even to small hit you took. So how do you deal with that hesitation? Because even I'm doing this for some time, still hesitate when I take setups, even though I know that they're probably good. Like, I'll just give you a quick example for me personally. I know you don't do flags, but for me, if I see this, my goal is to enter right about here as soon as this candle opens red and I see SPY pushing. But if I'm late, this I think you know from trading, this pop entering down here versus entering up here is at least 10%, 5 to 10%. So how do you feel?
Just that to get rid of the hesitation when you execute your trades, you just got to control your size. 90% of execution hesitation just comes from, when you take a position that you know you're not comfortable taking and a loss that you know you're not willing to take or that your account can't handle. So if you're trading something and you know that you're probably going to hesitate on the execution, 99% of the time you just have to size down and take the appropriate size. Because if you're not afraid to take off, let's say you're trading whatever the risk on your trade is about $100 versus about $1,000, you know that you'd be comfortable taking a $100 loss, but you're definitely not comfortable taking a $1,000 loss. So you in that moment you're going to hesitate less.
Yep, that makes a lot of sense. I think that's something that something that's underestimated so much in trading is sizing. 90% of your issues can be resolved perspective-wise with sizing, because you don't naturally hesitate to take a $100 position. But I think no matter how good a trader you are, the second you get to size that you consider big, you're going to hesitate. There's no point in which you're taking, I don't know, for you probably taking a 40, 50K position still is, I think, no matter what's scary, till you get up to that point where that's your average for a day. So I think that's just perspective-wise, sizing can solve this, I guess, kind of hesitation, not knowing where to get in, where to get out. You're more smooth and confident when you're taking the smaller size. So, Okay, so this is your next setup. You told me it was the 1055 candle, but I'm pretty sure it was the 1054 candle that you entered on.
Yeah, 1054.
Yeah. Okay, so let me just put that in green. So this is NVIDIA, different stock. So I think. And this just goes to prove that what we do, like scalping, works on any stock. It's just recently Amazon and Tesla are the movers, but I'm guessing if there's ever a day where another stock moves the same way, moves the most volatile, we'll definitely trade that. So I think
that's I wanted to bring in an example of something other than Tesla and
yeah, I think some people overly go against the idea of trading just Tesla and Amazon. But personally, what I found is sure there's different setups every single day, but why not go where you're the most comfortable as long as it works? Like, I personally know that you trade other stuff than just Amazon and Tesla, but Amazon and Tesla is where you're comfortable. That's where you do well. But we've talked about it. I think taking other stocks as well, getting used to other stocks, knowing how other stocks move. I think it's good overall.
So when there's something that I found is that when there's a catalyst to other stocks, they'll move more idealistically, essentially. Basic price action. Everyone has learned basic price action and what to expect on a breakout, how to expect the pullback to the critical level, and then a continuation move. So when there's a catalyst for other stocks, usually you're able to trade that and follow those same rules. But if you're trying to trade or scalp day in, day out, the same stocks is where you really get an understanding of how it moves. But if you trade a different stock every single day, when there's no news, you won't really understand how that stock moves, and you won't be able to capitalize on the moves that do happen on that stock. So I think it's sort of important to find your niche in a stock, in a bunch of stocks, not just one stock.
So quickly before we talk about this specific setup, just something that you said I think is important is, I know that people are going to ask, so how do some guys trade different stocks, small caps, some guys trade different large caps every single day? And I think it's because of the fact there's a commonality between all the stocks they're trading. They're always trading gappers, they're always trading new stocks, they're always trading second red day, first red day stocks. So no one's ever trading something uniquely new every single day. So for us personally, instead, we trade catalyst stocks and we trade the stocks we're used to every single day. So we know how catalyst stocks move, and we know how Amazon and Tesla for a lot of us move. For some guys, they trade just Microsoft and Facebook. Those are their comfortable stocks. So I think that the idea is a group or a certain type of stock, certain type of event, which is what you're used to. Small cap guys are used to gappers. That's what they play. they're used to stocks that halt a lot, that type of thing. So you just have to know what you're playing, know what your setup is. And I think each stock does have a personality, but groups of stocks also have personalities. News runners will move very similarly. For example, FedEx, UPS, and CRM all moved very similarly when they ran. So that type of idea. So
yeah, I think you put that perfectly. You just gotta find a niche. You gotta master it rather than trying to be, the jack of all trades essentially. And you're not doing the best you can, but you'd rather just focus on mastering your own technique.
Like I've seen a lot of stuff about people saying people who trade only Amazon and Tesla aren't like legitimate traders. They're not trading that type of thing. But I think the important thing to understand is we understand the type of stock we trade. We understand that there's news runners, and we understand that Amazon and Tesla naturally every day are just moving because of how, I guess, hyped up, and maybe Robinhood traders too, but like whatever constantly makes them move. So so now the NVIDIA setup.
NVIDIA. I entered NVIDIA at the 954 break. It's similar to the first Tesla trade that we broke down. 500 is obviously a critical level for NVIDIA. And we saw the break of 500, and we saw that I wouldn't say it faked out, but it did pull back a little bit. And it held 499-ish, I'm guessing. Can't really see the level. But we had that break of 500 and it pulled back. And so what I was looking for is, and that was understandable because it was on a sort of momentum run from 490 all the way from 490 to 500. So we saw the break of 500, we saw the fake out. I didn't enter on the first break, but then I was looking for the continuation after the pullback. So I think I entered at the 500 hold of the bids, and this is something that I spoke about on Tesla earlier, because we broke 500, so that's not new, and I'm not trying to catch that breakout anymore. Now what I'm looking for is to see if the buyers can hold the 500 level and continue pushing it up. So I entered once I saw the bids were holding 500 and the lots were consistently executing closer to the ask side. So I saw the buying pressure step up there. I think what happened here specifically in my case was I wasn't able to get filled exactly when I wanted to, and I ended up chasing it a little bit. So I think I ended up getting a fill around 500.8 or 501 or something like that, right before the 501 break. But yeah, what happened was it broke 501, I think it hit 500.3 or something like that. And then it pulls back all the way to 500. And at this point, I'm still in my position because the bids are still holding 500. And that's sort of what I was looking for in order to hold my trade. So once we did see the 500 bids break and we saw the last executing consistently below 500 is where I took my exit. And that was on the 1055 candle. Once again, I think my entry was definitely late and I did chase that. So that's one place where I went wrong. I didn't get the best entry. And yeah, I think my exit was about fine.
Perfect. Yeah. I think this trade is just classic fake out. This trade looks good overall. You get like a little consolidation here. The only thing that might have helped a little more is seeing a little more testing of the 500 level. But other than that, it's a really clean trade, especially at a whole number. 500 especially, we would expect to see a run. But I think something that relates to me with this specific example is for anyone who traded Tesla back before the split at 2000, it did this exact same thing as it broke 2000. We got this type of choppy thing where you would expect 500, a major number, to get a crazy run. But instead, we got chopped near that price point. So on that note, quick question before I think, unless there's anything else specifically you want to share, I have a few last questions. If there's anything you want to share overall that you think has helped you a lot in your journey?
I wouldn't say, I think more so I just wanted to talk about cutting my losses quickly when you're scalping especially, is because when you're scalping, you're entering with size, you're entering with far more size that you would than when you were, if you were day trading or swing trading, for example. So I think one thing that I just wanted to showcase was how quick you should be or you can cut your losses. Obviously, everyone's trading plan is different. But for me, at least, I know that if I'm trading bigger size and I'm scalping, I need to exit a lot quicker than waiting for the critical level, which is maybe 2 points, 3 points, even 5 points away. Because by that time, I'm probably going to be down maybe $1,000, $2,000, $3,000 per trade. Yeah. Other than that, I think we covered almost all the bases.
I have one last question. So I don't know, I didn't think we mentioned this at the beginning, but Arshad is uniquely young. Exactly how old are you?
I'm 19.
Exactly. So my question here is for younger traders, like I guess anyone like in the my age-ish up into like young 19, 20s, 21s, how at such a young age do you think, I think that as you get older, it's a little easier to achieve that mindset with solid salary, savings, all of that. But at our age where we're kind of just trading the money that we have. And I'm sure that people tell you don't trade money that you can't lose, but I guess for us, there's not much money that we can technically lose. We don't have that type of 50, 100K savings yet. So how do you get the mindset to trade and not be emotionally attached to the money and let that get in your way?
Yeah, I mean, I had a huge issue that I had when I started trading was just the fear of taking losses because I'd already blown up 7K in 2 accounts. So I had that fear of loss when I first started. But I think when you're starting off, your goal should never be to make big money. Especially with trading, it's not just like a salary where you get consistent income every single month. So when you're starting off, I think it's more important just to focus on taking on good trades and sort of trying to build that consistency, because I think consistency is what's going to make you a profitable trader on the long run, rather than just making, big days, big green days, big red days. That's not something that's sustainable in the long run. So I think I got rid of that fear of taking a loss, essentially just by, choosing my expectations in a sense, rather than having huge expectations that I want to make a doctor's salary in my first year trading.
Which you had just FYI, you already did that, but.
I mean, yeah, but exactly. Like I was never trying to do that in the first sense. I was my only goal was just to take on good trades and just to build consistency, because I think on some level I knew that that's what makes profitable traders, rather than just making one big trade and winning big.
Okay.
Also for younger traders, I know that I wouldn't call it hate, but there's a lot of like a lot of people question your knowledge and your experience in anything you do. So I think it's important that if you really, really want to make it, you have to, on some level, block out the noise that other people are putting out towards you, because that definitely gets in your head. And I know that when I started, I did have quite a few people telling me that, day trading is not possible, scalping is not possible, you cannot be profitable like that. So if you really believe that, it's something that, and this doesn't just go for trading, it's pretty much for anything. Really believe that it's something that you're passionate about and you want to succeed in, you got to focus on your own journey and block out the noise, essentially.
Okay. So I think that's it for us. So Emiliano, do you have anything to wrap it up with?
Well, I think that was an absolute amazing interview, man. And I'm glad that Jay was able to do it, and I think he did it way better than I could have ever done it. So I want to thank you, Arshad, first of all, of course, Trader of the Month. I'll be seeing you in the SML group here in LA, hopefully. And Jay, again, it's always, Jay is a part of the Discord that we have, and he is a very, very active member of it. So with that being said, I think everybody here was able to get a lot of knowledge from you. And again, I don't think anybody can say, anything about your experience, your current experience, I believe is to be greater than most of the people who I've pretty much met, who have been in, I don't know, like years. And here you are, you're 19, same age. And it's just an absolute inspiration, man. So I want to thank you, Arshad. I want to thank you, Jay. And I want to thank everybody who's, taking the time to watch these interviews. Make sure that, you guys keep growing. And I think we'll go ahead and end it here. You guys say so?
Thanks for having me, guys. It means a lot that you called me on. I'm glad I was able to share my experience and, some tips and tricks that I've learned along the way. So thanks for that.
Anyways, you guys have a good one, and we'll see you in the next one.